Welcome back, guys. This is the final episode on the beginner session of Ground Traders Training Program. Still your host, Joseph Igoche. This session will be dealing with the four major stock markets openings and its advantages, and then the pitfalls to avoid in forex trading. As a beginner, you need to know all these things and keep them handy. Now, the four major stock markets opening and its advantages includes the ability of a forex market to trade over a 24-hour period is due to the fact of different international time zones. These trades are conducted over a network of computers rather than any other physical exchange that closes at a particular time. For instance, when you hear that the US dollar closed at a certain rate, it simply means that was the rate at market close in the New York Stock Exchange market. That is because currency continues to be traded around the world after New York's trading session closes. The international currency market is dominated by a single market exchange but involves a global network of exchanges and brokers around the world. Forex trading hours are based on when trading is open in each participating country, while the time zone swaps or overlaps. The general accepted time for each region as follows. The New York time opens 8 a.m. to 5 p.m. Eastern time, and then 2 p.m. to 11 p.m. West African time. The Tokyo session opens 7 p.m. to 4 a.m. Eastern time, and then 1 a.m. to 10 a.m. West African time, while the Sydney session opens 5 p.m. to 2 a.m. Eastern time and 11 p.m. to 8 a.m. West African time. The London session opens 3 a.m. to 12 noon Eastern time and 7 p.m. to 6 p.m. West African time. Yes. Now, what are the pitfalls to look out for or to avoid in trading the forex market? One of them is greed. Never be greedy in the forex market. Always try to trade using reasonable lot size and ensure to use money management. Whatever you want to gain, also be ready to lose. Second of that is revenge. The forex market has no emotions. It is not a human. Learn to take losses as an experience and try to improve to not make such losses again. Desperation of trying to recover losses immediately after it occurs tends to or leads to irrational steps and terrible mistakes. The next is euphoria or fear. When the good is going and profits are coming in, try to only stick to your daily targets. Always be disciplined enough to tell yourself you have made enough and you can shut down your terminal. Example of common fears in this industry are fear of missing out, fear of leaving money on the table, or fear of letting a profit turn into a loss, and then fear of losing, fear of not being right. Last point here is ignorance. Never get to the point where you enter any business, especially in the trading industry, without a solid understanding of the venture. Always have a technical or fundamental reason behind opening a trading position. At this junction, we'd like to wrap it up for our beginner session. We'll see you at the intermediate level, where we'll teach you further principles on how to trade the financial market. Alright guys, thank you so much for watching through this episode. And final for this beginner session, please don't forget to like, subscribe, share, and invite family and friends. See you in the next session. Remember to always keep it simple, keep it principled, and keep it profiting. Blessings.